This is Mary Jo with Sean Higgins of Cross Country Mortgage, and we're here to talk about our favorite topic and yours, which is money. Today we're going to talk about online lending. You've seen the ads, press button, get mortgage. We're having a reality check right here and right now. I'm handing it over to Sean because he's the expert, but I have a tale to tell.
Oh, expert, that's strong. That's a lot of pressure. When it comes to the online lending, guys, I think there's really two spectrums of that, right? There's one spectrum of the online lending that is very attractive when it comes to price. So low interest rates, low closing cost. I think on the other side, you have an incredible marketing machine that is constantly out there in your face and letting you know what the availability of mortgage and real estate and how you can get that. And again, a lot of times people always talk about, marketing can be better in your product, right? Or more important. And I think so you have those two spectrums right there. What we always tell people is that, if you're working with either one of those spectrums, you're taking a risk. You're purchasing the biggest thing you've ever purchased in your life. And you got to be willing to understand that you may be working with people that knowledge and the idea of making sure that's the best for you may not be always the best thing in play. So what we like to tell people is that, listen, we're always going to be as competitive as we possibly can when it comes to interest rate, but there's three things I know that you can't beat us on, and that's service, speed, and knowledge. Okay, so and it also has to do with the relationships we have with the person that brought you us in the first place. So, I'm not going to say that they're horrible, they're all horrible, but the reality is those three things are not what their business is geared towards. They're geared towards transactional things, where we're looking at it as it's not a one size fit all type scenario. We want to create a relationship long term, not just on this transaction.
Okay, I have a tale to tell. The mortgage says press button, get mortgage. Mm-hmm. Okay, so I had a client who had used this particular company before. He goes, oh, they're great. And I said, well, this is an investment loan. Are you sure they're going to be good? And he goes, yeah. I said, just do me a favor, talk to another lender, get estimates or whatever. So he finally, he decided he was going to go with this company. And so I'm waiting for them. And the estimates you're supposed to get within 3 days, I had to call 3 times saying, where's the estimate? And they go, oh, well, he can log in. I said, send it over. I saw 3% loan origination fee. What's normal?
Less than that. Yeah.
One is about normal.
Yeah.
So all of a sudden he's got $9,000 extra in closing costs that he didn't have before. And he goes, oh, I never noticed that. The lender didn't know that this was an investment property. She was doing it as an owner-occupant, and those are different loans. She didn't know that it was attached to a 1031 exchange for investment because she didn't know what a 1031 exchange was. So finally, a week before closing, the manager took over the file. And she goes, oh, it's not really 3%. It just looks like that. And I said, if it's in black and white, I'm guessing it's 3%. What you're telling me doesn't count. What's here on this document counts. The numbers were, I will say, beyond opaque. It was like a mud pie. I couldn't tell what was going on at all. Yeah. I've been in real estate 20 years. I know how to read an estimate, for God's sake. So then they sent like, oh, would you rate us 1 to 10? I get you 2.5. That's it. And they go, oh, well, why? So I told them why. And that lender's no longer there. But it's an enormous risk. I think, and then they were going to add another $20,000 to cash to close because of whatever. So he was going to have to come in basically the 9 and the 27 with an extra $35,000 to close. Oh, that's not happening. That isn't.
Yeah, and the thing about it is when you're dealing with someone that's, in that circumstance, the reality is that there's the human touch part of it, the relationship responsibility, the reputation responsibility for all the parties involved obviously is limited, right? If this person that's 7 states away, this thing blows up, it's really no skin off their back, right? So if you're having someone local or that you have a relationship with, there's just more incentive for them to make that happen. The other thing I'd say is just pay attention to the fine print. Sometimes these guys there's some very good loan officers online that, that take their business seriously. It's just the majority of them aren't in that category. The other piece to it is that, I work with a lot of really good financial advisors, and when I'm talking to them in regards to, the fees for their services and everything, I talk about, some of the struggles we have right now, because really the pricing struggle for us is real. It is so real because we're dealing with customers that we feel we're providing a lot of things outside of interest rate and closing cost. And at the end of the day, when they're constantly bombarded with need to save money, there's deals we're not getting no matter how much service we're providing to them because of that fear of loss or that extra cost. And, I'd ask them, I said, with all the things that you provide, what's something you do to deal with that? And this is for any consumer, and I think about it myself as well. You have to ask yourself, when is the last time you bought something at the cheapest price in the short term and you looked back at it long term and it was a great idea? Really not too many things,
Never.
right? It's very few, unless it's like Chick-fil-A.
Yeah.
And then you should have got the salad, right? So it just doesn't happen that way. So, you have to think of it that way when you're dealing with the biggest asset you're going to purchase. I think having as much knowledge and as much information so you feel you can make the best educated decisions is super important. And obviously price is a piece, but the other parts play a major role as well.
I will say that most buyers don't know how to read those disclosure statements.
Yeah, they're difficult. They're very difficult.
I have found over time there were just, there were junk fees in there that didn't need to be there, and an exaggerated loan origination fees, or that they were charging you for something that wasn't even on your loan. Most people don't know how to read them. I do, and I'm just, I'm like that estimate cop. Check on that for my buyers, because I just think, how would I want to be treated? If I don't know and really understand it, I want somebody to guide me, and that's our job. Our job, yep, we want to make a living, of course, but it's more important that you get the house you want at a price you can afford with a loan you won't be sorry about in a year or two.
Absolutely.
Thanks for watching, and we'll have more. So stay tuned.